Hello and welcome to another edition of Kalkine Media's popular Invest Nest webinar series. This one is titled Two ASX Players Aiding in Global Transition to a Low Carbon Future. My name is Rachel Jones. I'm an anchor and reporter with Kalkine TV, and I'll be your moderator for today's event. Now, before going ahead with this session, it's important to note and to make you aware that this webinar is for informational purposes only and is not a solicitation or recommendation to engage in any investment activity under discussion. We're neither licensed nor qualified to provide investment advice through this platform. Now, the key idea of InvestNest webinar is to present our audience with a panel of experts who'll share the potential of their businesses and growth strategies, along with their company's value and vision. This event aims at sharing heaps of insightful themes and breakthrough trends in the Australian markets. Now, the business presentations will be for around 15 minutes, and they'll be followed by 5 minutes of questions from the audience. Webinar attendees can post their questions in the Q&A chat box during the webinar. Now, if due to time constraints, we're unable to take your questions live, they can be sent to us at info@kalkinemedia.com. We'll get all your emails answered by our panelists. Now, from electric vehicles to smart environmental solutions and lithium-ion batteries, the world is looking to clean energy solutions to support a net zero clean energy transition. Around the world, projects that commercialize new low-emission technologies are seeing heavy support. Many materials sector players have a huge role to play by developing materials and technological solutions that enable this energy transition. In this webinar, we'll focus on two ASX-listed materials sector players and learn more about their abilities to lead the way towards a cleaner and greener future. Firstly, we have Cooper Metals, a mineral exploration company involved in the discovery of copper, which has been gaining traction owing to the increase in electric vehicle adoption. Secondly, we'll understand how CarbonNext is developing environmental solutions through new age carbon technologies for a greener future. The webinar will bring forth how these two companies are contributing to global transition to a low carbon economy. I'm happy to introduce our speakers for the day now, Mr. Ian Warland. He's Managing Director of Cooper Metals, and Mr. Warren Murphy, Managing Director of CarbonNext. Let's begin with Ian Warland. Now, a highly experienced and successful geologist, Ian was awarded Explorer of the Year in 2006 for the discovery of jacinth and ambrosia zircon-rich mineral sand deposits in the last decade. Ian has served the junior exploration sector as a geological consultant. He's held several senior management positions for Musgrave Minerals and Marmota, after having worked at 27Co as its Chief Executive Officer for the last 3 years. Ian is now an integral part of the Cooper Metals team as its Managing Director. Welcome to Kalkine Media's InvestNest webinar, Ian Warland. Please share your presentation deck and take over the virtual stage.
Thank you, Rachel. Just get this. So you can see my title slide there.
Not yet. Hasn't popped up yet.
Just confirming that. Right. Thank you very much, Rachel and Kalkine Media, for giving me the opportunity to speak today about Cooper Metals. Now, we just listed in late November 2021, so we're quite a young company, and we have copper gold projects in the Mount Isa area, which I'll mainly be talking about today, and also in Western Australia. Quick disclaimer, corporate snapshot, so at about 13 cents. We've got 46 million shares on issue. We have a market cap around 6 million. Today, that's more closer to 8 million, as we did an announcement today, which was favourable into the market. The cash position at the end of the March quarter was about $2.6 million. And the top 20, like we're quite very tightly held. So the top 20 have over 50% of the shareholding. And one of our larger group is the Weller Group, which is a great vote of confidence for us because they're very astute investors into the resources sector, and they have picked up around 5% of Cooper Metals. We've got quite a small board, 3 people. Michael and myself are both geologists, although Michael's also got a finance degree, and he's been mostly working in the capital markets for the last 30-odd years. Rachel's already told you a little bit about myself, so I'm an experienced geologist of over 30 years experience in Australia, internationally and domestically in a range of commodities. And Tim, he works for Prenzler Group. He's an institutional financial advisor and very, very experienced as well in capital markets. So Rachel talked a little bit about copper. Why copper? Why are we keen on copper as a company? Because obviously the demand is increasing dramatically as we shift into this clean energy and electric vehicles. And we all know that we need a lot more copper to have this clean energy transition. And look at the 9 critical minerals that are mentioned by the International Energy Agency. Copper really is the most important. And of course, this is leading to increased demand. So in the next 15 years, we're going to need double the copper that we're currently refining. And there's a looming supply gap. So that's obviously putting upward pressure on copper prices. Just the other day, copper hit a 3-month high. And I can see, over the next decade that this is really not going to change, and we should see an appreciation in copper prices. And of course, that's making a lot of the smaller deposits and lower grade deposits more economical to mine. And small companies like us, where we're looking for those small, medium-sized deposits that we can monetize and is still worth a lot of money. The other thing, I guess, about the copper supply side of things is that companies are really being held to account now. Where are they sourcing their copper from? They need to be sourcing it from countries that are doing sustainable mining practices. When you get an increase in copper price, you do get an increase in artisanal miners in some of these third world countries that can have fairly poor safety and environmental outcomes. So it's important that the companies are sourcing their copper from good, sustainable sources like in Australia, for instance. Quick project summary. We've got 3 projects. The main 2 projects are the Mount Isa East Copper Gold Project, near Mount Isa, of course, and our Guru Copper Gold Project, which is near Silver Lake's Deflector Mine. So jumping right into the Mount Isa East Copper Gold Project, you've got a map here that you can see. Mount Isa is on the left-hand side of the map there. So we're only 30 to 50 kilometres from Mount Isa, and we've got a very large tenement holding, around 1,600 square kilometres of tenure. The other things to point out here, in yellow, you can see at the bottom of the screen are the Carnaby Resources tenements. They've been getting some great discoveries around Mount Hope, Lady Fanny and Nil Desperandum, and we're all in the same geological environment, this Mary Kathleen domain, which is very prospective for copper gold deposits. Our recent drilling at King Solomon that we concentrated on last year and early this year has already found significant economic intercepts of copper gold mineralization, and there's more work to do there, but we have many targets to systematically work through. A little bit about...
I just need to let you know, we can't see the presentation deck at the moment.
It's dropped out.
Yes, sorry.
Let's try that again. Share screen.
Yeah, we can see it.
Can you see it now?
Yes.
King Solomon drilling program delivers significant copper gold.
Yes, brilliant. Thank you. You may continue your presentation.
Yeah, so not sure if everyone saw this slide back here. But anyway, so that's Mount Isa here, 1,600 square kilometres of tenure that Cooper Metals has. You've got Carnaby Resources down here to the south, where they've been getting some great deposits down there. And the Mary Kathleen domain here is very prospective for copper gold deposits. King Solomon, I'm going to talk about, is just up in the sort of middle of our tenement area. So we've done about 7,000 metres of drilling there. There was a series of old workings at King Solomon, like 3 old shafts and some shallow pits. And there'd never been a drill hole done in under this particular deposit. And just like Carnaby, who'd been drilling under Mount Hope, testing these old mining areas, we've been getting some very good hits. So you can see up to 19 metres at 1.6% copper and 0.2 gold. The mineralisation spans for about 650 metres along strike, and it's in three distinct pods. On this map, you can see these hot coal colours, which is the IP, or Induced Polarisation Geophysical Survey, and that helps guide our drilling as well. So looking at what I call a long section, so this is a slice down through the length of the ore body. You can see these little dots here. They are drill intercepts. The brighter colours are the higher grade copper gold intercepts. And we have outlined 3 different plunging chutes. We've only drilled down to about 150 metres deep at this stage. These deposits can go a lot deeper, and therefore the next thing to do here is to do some diamond drilling to get some structural information to help guide us deeper down and see if we can extend that mineralisation. So it's really quite exciting. We're already getting good economic intercepts, and we're testing a number of other targets in the region too, so that we can hopefully get a camp scale size of deposits, like 1 to 6 deposits that could be potentially toll treated through one of the bigger mines. So how are we building this pipeline of copper gold targets that we can test? One of the things we use is airborne electromagnetic surveys called VTEM surveys. And we've done over 2,200 line kilometres of VTEM in the last 12 months or so. And that has generated a number of anomalies. Now, these anomalies could be due to bedrock conductors under the surface. We know that the Barbara deposit has a bedrock conductor associated with it, and that's about a 5 million tonne deposit of copper gold mineralisation. Luckily for us, the government partially funded some of this VTEM survey. We put an application in and received that funding just in the last month or so. So we've got a number of responses that we're following up. And just last month, I announced the discovery of a new prospect called Raven, and the Bowlers prospect, which I'll talk a bit about. So in the northern part of our tenement area, the VTEM anomalies, we found 10 VTEM anomalies to check out. Well, once you find a VTEM anomaly, you need to go check it out on the ground and see if there's any sign of any alteration of mineralisation. Now, out of those 10, the best anomalies that we think out of those 10 are 3 of them: VTEM 3, 5, and 10. So we got the geophysicist to do some modelling on those, and he's come up with a robust plate model that you can see in red. And they are drill targets that we'll be testing later this year. Further down to the south, the new Raven prospect, which you can see just over to the right-hand side of the screen. When you're looking at these VTEM anomalies, the first prize is walking up to the area and finding some copper gold mineralisation poking out its surface, and that's what we found at the Raven prospect. So we have a coincident electromagnetic anomaly, and we also have copper gold mineralisation on the ground. Now, this wasn't in any government database. There's no workings there. So it's a new discovery. So now that we've found copper gold at surface, we're doing some geochemical sampling and mapping to get that drill ready, and we'll be drilling that again later this year to see if there's any depth extent to the mineralisation and what sort of size it may be. We have a number of these prospects to follow up, such as Costine, a Southwest prospect, and also Yarraman prospect nearby. At our Ardmore tenement, which is only about 3 kilometres away from Carnaby's Mount Hope deposit, where they've been getting spectacular copper gold intersects, we recently did some drilling, and we also did an independent consultant's review of that area. We're quite lucky at Ardmore because you can see on the screen there, those bright colours there is from the magnetic image. There was a detailed magnetic survey done by previous explorers in the area. That data was lost to the government databases, but we managed to retrieve it from the original people that flew that survey. And we've had a geophysicist review that very closely, because what we're finding is that magnetic highs that are coincident with major faults or lithological contacts could be great trap sites for copper gold mineralisation. And we've identified 11 of these targets on the Ardmore tenement for follow-up on the ground. About 3 of those we've already gone to on the ground and found some higher grade rock chips up to 17% copper and 0.7 or almost 0.8 grams per tonne gold. So we're following this up with the team in the field right now. We did do some drilling at Ardmore South on an IP target or an induced polarisation target in June. The results have just come back for that. And the really encouraging thing about the drilling results from there is that it shows that there's a large sulfide system. The copper mineralisation is sort of lower grade, around a 0.1, 0.2, but it shows that there's mineralised fluids in the area, a strong iron oxide, copper gold fluid source in the area. So it's a very fertile area. We just need to find the right trap site for a higher concentration of economic copper gold mineralisation. And that's what this magnetic targeting is going to help us do over the coming weeks and months. Just getting to the end here of Mount Isa, multiple copper gold prospects to follow up. We'll be testing a lot of these over this field season, the 2023 field season. We're planning around 5,000 metres of RC to do some scout drilling in a number of these prospects. Just touching on environment, social and governance, it's very important to maintain your license to operate in the area. So we're very mindful of cleaning up the environment as we go. So all our exploration drill holes are cleaned up very quickly and rehabilitated. We do a lot of stakeholder engagement with the local Indigenous and the landowners to keep them on side and to meet their needs. We've all got to work together there. And we've spent a lot of money in the community at Mount Isa as well. Just jumping over to WA, lastly, we've got the Guru Copper Gold Project. It's not far from Silver Lake's Deflector mine. So this is about 400 kilometres to the northeast of Perth. Silver Lake's Deflector mine has about 1.2 million ounces of gold and 0.8% copper. And it's in the Gulliver Greenstone Belt. This is really a greenfields play for us. There hasn't been a lot of work done in the area there. We've recently picked up a new tenement. We've done some geochemical sampling and identified 5 areas of gold anomalism that you can see on this new map here. We're planning some RC and air core drilling later this year in the area, chasing up these gold anomalies. So that's a new greenfields area. It's really quite exciting as well. So really the key takeaways for Cooper Metals is that the new government-funded VTEM survey has identified a number of anomalies in our northern tenements, 3 of which look very good and are drill ready. So we'll be drilling them later in the year. The VTEM surveys also found the new Raven prospect, which has copper gold mineralisation outcropping at surface. We have teams in the field at the moment, continuing the mapping and sampling of these areas to get all these things to drill ready. Significant gold anomalism at our Guru prospect in WA. And look, we've got a very modest market cap, around the $6 to $8 million. So any success that we have with our tightly held share register should translate to a strong appreciation in the share price. So thanks for your attention today.
Thank you very much, Ian, for that presentation. There seems to be a lot going on, particularly in Mount Isa. Next up, we have Mr. Warren Murphy. Now, he's Managing Director of the Cobbenex Group. He's steering the company towards quick construction of its Kentucky plant, which will enable the company's entry into the commercially lucrative PFAS removal market. Now, previously, Mr. Murphy was co-head of the Australian Infrastructure and Project Finance Group. He's also held the position of head of energy at Babcock & Brown in the past, where he led the development of the company's energy vertical capability in Australia and New Zealand. He also founded Infinigen Energy, and he's been director of multiple listed companies in the past. Welcome to Kalkine Media's Invest Nest webinar, Mr. Warren Murphy. And if you would like to share your presentation deck and take over the virtual stage.
Thank you. I'll just share my screen. Hopefully you can see that now.
Yes, all looking good for this end. Thank you.
Okay, thank you. So thanks everyone, and thank you Kalkine for the opportunity, and Rachel for the nice introduction. Carbonext, as you outlined in the beginning, is a pollution control company. Our job in life is to clean air and water emissions. And we do that through producing a product called activated carbon. Many of you will have experienced that in life and probably not known what it is. It's a product that that is well known to purify water. Essentially, it's kind of like a sponge under a microscope, and is a pure form of carbon with lots of holes in it that essentially captures impurities. We are at a profound change and very exciting change in the company's history. We have just completed a major new joint venture in Kentucky that has been executed, and we are in construction on a new plant, which we'll go into a little bit here, that will bring online very low cost but very high quality product for us to sell into a brand new market that is being created by a major regulatory change in the US, which is to bring in regulations to control PFAS, or forever chemicals. And again, I'll go into a little bit of that. So, but just brief history. Listed in 2018, we're around about 20 odd million in market cap, and a bit like the previous discussion, you know, three directors, with one director just announced coming on board yesterday, and we're very excited to announce that the former lead for one of our competitors is joining us as a director, bringing a tremendous history to add to the board and a huge amount of connections. So our new director will be joining us very shortly. So just a few highlights. I just mentioned we've entered into this new joint venture in Kentucky with a group called Kentucky Carbon Processing. They bring a very low ash, high quality carbon to the plant. They also bring contribute assets which were previously a low temperature waste energy power plant, and so we get the advantage of coming to the market quickly with a very low capital cost entry point, very low operating costs relative to our peers, and yet at extremely high quality. So it's a terrific achievement by our team and by Kentucky to get this all up and running, and we'll be online with this plant early in 2024. We've already secured the funding through a debt and equity raising last year, and the closing of that financial close in May, and so late May. As I mentioned before, plant under construction. We're expecting to see products sold for this plant around $4,000 a ton. Initial production around 10,000, and we own 50%. or we'll own 50%. So if you do the maths, that's a pretty major increase in revenue for our company when our market cap is around 20 mil. Our turnover last year was 18 million. So, very much a dramatic step up for us. The market itself is very large and expanding rapidly through this PFAS regulation. The US Association of Waterworks, which is all the water utilities, are forecasting a minimum $1 billion market size in US. At this point in time, when we enter very shortly, we're one of only 2 players. So that is pretty exciting for us to enter in such a lucrative market. As I mentioned, really attractive margins, low cost opportunity, and with immense following winds here caused by this big change in the US regulations, with also the infrastructure law that they've passed being a solution of funding for those utilities to put the CapEx in place, and also some OpEx to purchase these products. I won't go too much in this, but effectively a 50-50 market. I don't know why I've got an old screen here, but I do apologise. I will quickly change that. I don't know why that particular screen has come up. Sorry guys, I'm just going to find out why I got the wrong presentation. Very embarrassing.
We can give you some time there.
No, I've just got it back. So sorry.
Okay, excellent.
Just trying to share it now.
Fantastic.
Sorry about that.
That's okay. Thank you very much. Look forward to having your presentation back on shortly.
Yeah, so I should be up now. So the key features of this joint venture are that basically a 10,000 tonne plant able to be expanded to 20,000 tonnes for a relatively very small amount of money relative to the initial plant cost to us for our entry point of 10 million US. We've paid 5 million already, and then there's $500,000 completion, and then a series of steps to play the rest out as we've gone up into production. The key points here for us are that KCP, our joint venture partner, is taking all of the cost overrun risk, as well as operating the plant and taking the operating cost, initial operating cost risk as well. Where are we? We're essentially into construction, quite, by buying an existing asset, and the key piece of that plant is there as a picture of a kiln. That kiln is currently being modified for use as an activated carbon plant. The rest of the emission control systems inherent in a power station are already in place. So we start the day being 70% odd of construction activity already underway. And so we are into construction, and we anticipate being able to deliver production, as I mentioned earlier in 2024. I've sort of skipped a bit over the different products and what we do, but essentially we currently produce powdered activated carbon that is, as I mentioned earlier, kind of looks like a black talcum powder under and we also produce pellets. So the powder product was typically for us used as an entry point to capture mercury emissions from coal-fired power stations, and when we produced a pellet for a particular type of high efficiency, low emission power station, it was a unique development, and we then found a market in the industrial market for pellets. We're most likely producing pellets in Kentucky. That's the intention, but that product will be totally and absolutely dedicated to water utilities. Water utilities currently use granular carbon, which is pictured down below, which is essentially what it suggests, sort of chips of carbon. But in our case, we think that pellets are a much better opportunity in terms of the characteristics that they bring to the utilities: easier to handle, low dust emission, and most importantly, better pressure control, drop control, which improves the efficiency of the water utilities in terms of the amount of electricity they use, and therefore a better cost. As I mentioned, the introduction of this removal of PFAS, or forever chemicals, from the market is a profound change for us, just a massive new market for the entire industry. We conservatively here saying a 600 million new market. We of course can address that existing market as well. For those who don't know, PFAS is a chemical that's a series of chemicals that have found their way into our environment through things like fire retardants, but you know, the stuff like coatings on cooking ware, that kind of stuff is leached into the environment. It has very serious health effects. You can tell from the name forever chemicals that's thrown around that it lasts and builds up in the environment. The American government has made a decree to remove it from their water system, and every utility in the US by 2026 will have to remove it from drinking water. So very big change, very big market, and where we are an early entrant with very significant intellectual property advantages to bring to those solutions. A bit more on PFAS for people who want to have the opportunity to look this up, but essentially I'll refer everyone to various EPA changes. But PFAS, terrible stuff, can produce cancer, birth defects, high blood pressure, etc. We're also in a background where, even without this new demand coming in, we're seeing quite significant price increases in the marketplace anyway. And we give an example here of publicly available information on a Florida utility showing the sort of increases that we've seen over the last few years. Not surprising given the inflationary environment we've been working in around the world, but nevertheless our competitors have been putting up a series of price increases around 15 to 40% for one of them at the end of last year, 20% recently for another. So we're in an environment where our price is increasing, yet there's this very significant demand shock coming in, which is obviously also, we believe, going to give us a very interesting supply-demand dynamic. We are very much a science-led organisation. David Mazak is our lead in the US, our US CEO. He's the head of technology of the company. He is the former chairman of the Activated Carbon Standards. He wrote the standards for the industry. PhD in environmental engineering and in fuel science, basically the world expert on this subject matter. We also have Dr. Regina Rodriguez with us, who is one of our senior executives. She is now the current chairperson of that Activated Carbon Standards Authority, so very much someone in touch with all of the water utilities, as is David, giving us an amazing insight on where this market is going and what the utilities are looking for. And we started at the beginning there with a bit of an intro on me. My background is very much finance and energy and infrastructure, so all the dealings with utilities, etc., has been what I've been doing for many, many years. Matthew Driscoll is our chairman. Comes to us with a long background in capital markets and financial services companies, and is a director on numerous companies. So that, in a very quick fashion, was us. If I encapsulate, again, pollution control company, amazing joint venture that we've just entered into, incredibly exciting. We should be up and running early next year with a major change in our revenue and profitability, quite a quantum scale change, and we have incredible tailwinds of US regulatory change, bringing in new regulations to grow the industry, and we are one of only two groups that are currently targeting that industry. So we look forward to a major change to our company in 2024. And thank you for the time.
Excellent. Thank you so much for your insightful presentation there, Warren. Very interesting. And you obviously have a very busy year ahead with CarbonX. Thank you so much for that. So now we're going to move towards some questions from our audience as they've been posting them through. Let me just see. Some questions that we have received from our Q&A deck. I think the first one, we're going to Ian with the first question. And Tom is asking, which are the most significant CU occurrences that you're targeting presently?
The most significant copper gold occurrences, yeah. Okay, so King Solomon, where we've already hit economic intercepts of mineralization, and we're going to be chasing that down dip to see if we can grow that mineralization envelope. And the way we'll be going about that, firstly, is with some diamond drilling to get some more geological and structural information, because it is a bit of a complex beast, and we think there's some plunging chutes there, and the diamond drilling should help us unravel that mystery, and then we can follow that up with some deeper drilling. So King Solomon is one of those areas. There's the Raven prospect with the coincident VTEM and copper gold mineralization at surface. There's numerous prospects that we have that are all at the sort of same sort of level of prospectivity, and just with a little bit of extra work, boots on ground, we can up those rankings or change those rankings around. But really, you just need to do a bunch of scout drilling to see if there's copper gold mineralization underneath these occurrences, and that's what we're really focusing on for the rest of 2023, is to do this scout RC drilling into a number of these high priority prospects and see what we find. And if we get some good economic intercepts, we'll expand the programs as required. Yeah.
Excellent. And just sticking with you again, Ian, please. Mary wants to know, how do you see Cooper Metals contributing to the global mined copper production over the next 5 years?
Well, look, we're a small player. We'd like to be a big player. You can see, if I draw an analogy to like Carnaby Resources, let's say 18 months ago, they were a micro cap like us. You know, they've now had significant copper gold discoveries. They haven't released a resource yet, but I'm assuming that resource will be quite good, and they'll be able to then transition into a miner. So they'll be producing copper resources, and we really need to, or copper metal. So we really need to find, Australia needs to find, the world needs to find a lot more copper, and we need to mine it in a sustainably and environmentally friendly way to produce the copper that we need for this transition. So our biggest contribution really can be if we can make new discoveries that can be turned into mines and produce the copper that we need.
Fabulous. Thank you so much. Thanks, Ian. Moving on to Warren now. We have a question for you. Joe is asking, how is the demand, and I know you touched on this in your presentation, but how is the demand and prices of powered and pellet products over the last few quarters? What changes have you seen?
Well, we've seen definite increases in pricing, not only in the overall market, but within our own business. And some of our major contracts were up 20% over the last 6 months. We're instigating a range of price increases at the moment, so we expect to see further increases of similar kind of stature. As you can see from the presentation, there's expected quite significant increase in the market for carbon in water utilities. So the PFAS regulations should more than double, I think probably triple the size of that market, and without new supply, much more than what we're talking about and much more than what our competitors are talking about, we will see very significant price increases there. So we're already seeing price increases, but we expect to see more. Our product itself, in this carbon product that we're talking about from our Kentucky joint venture, we're talking about prices that are somewhere around $4,500 US dollars a ton. That's up 20% over the last 9 months to 12 months.
And just sticking with you again, we have an anonymous attendee has asked a question. What are your expectations about the US market? The government and regulators are working to improve drinking water regulations, they've heard. How would this benefit Carbonex?
Yeah, I think I've probably probably gone through that a fair bit in my presentation, but they are a profound and exciting change for us. The government has made a key plank of its changes in environmental regulations to improve the water supply for all Americans, and they've thrown a considerable amount of funding behind that and regulatory heft, and the regulations are going to affect every water utility in America, and there's a few thousand of those. And we don't need to sell to that many for us to be a much bigger company than we are today.
Excellent. And just finally, one last question for you. Nathan Wise wants to know, how is Carbonex different from other companies when it comes to the EV sector?
Well, Carbonex isn't actually in electric vehicles. I'm sorry if I didn't make that clear.
Right.
We don't produce batteries or indeed graphite. We are producing carbon that is utilised in purification of air and water.
Okay, excellent. So that's all for our Q&A section of this presentation. Thank you. Now, before we do end the webinar, I'd love to just go individually back to the presenters to give any closing remarks or any takeaway notes that you have. So Ian, starting with you, if you could put your camera on full screen and just finalize the webinar, please.
Sure. Thanks again for having us. Cooper Metals is in the right location at Mount Isa. It's a highly prospective area. We've got a large ground holding. We've got numerous copper gold prospects that we're following up. We're well funded, and we'll be testing these prospects over the next field season. The field season finishes in December this year. So there'll be a lot of news flow coming out. And like I said, we've got a small market cap, tightly held, share registry, so any discovery or any success that we have will be translated straight into a higher share price appreciation.
Fabulous. Thank you so much, Ian. And over to you, Warren, now, if you would just like to finish off with some closing remarks.
Yeah, thank you. Very much a pivotal moment in our history, as only in the end of May did we announce the closure of this joint venture that we've been working on for some time in Kentucky. There will be material change in the size scale of our business. That funding is already locked in, and construction is going well. We anticipate being online with that plant, which is a 40 million turnover increase in our business through early in 24, when we expect to be fully up and running by the end of 24 at that run rate. So very significant revenue change, highly profitable, with our partner taking the operating cost and capital cost overrun risks. So we feel that we're in a great place, in a great time in history for pollution control companies.
Fantastic. And here at Kalkine, we'll definitely be keeping a close eye on your company. So thank you so much, Mr. Ian Warland and Mr. Warren Murphy. On behalf of Kalkine Media, I'd like to extend my gratitude for addressing our audience with your insights and answering their queries. Now, on this note, I'd also like to thank our audience for attending the webinar. We hope each one of you found this session informative. And to delve further into equity and market updates, please visit us at our media site, www.kalkinemedia.com/.au. Also, our equity research website, kalkine.com.au. Stay tuned with Kalkine Media for the upcoming InvestNest webinar series. Hope to see you all once again. And we're very active on social media. Please stay connected with us on Facebook, Twitter, Instagram, LinkedIn, and YouTube. And if you have any questions, our email ID is info@kalkinemedia.com. Stay apprised and invest wise. Thank you all once again, and have a good day.